So, what's really going on in the US economy? And what does it all really mean for gold and silver? I feel like it's similar to turning on one of any of the major news stations now across America. When it comes to how well the US economy is doing, you're going to get a different message and a different perspective depending on where you go. While Wall Street is showing now 3 more days of gains after the epic sell off we saw last week, Main Street is not really recovering yet. It has not helped that all the recent civil unrest in many U.S. cities has continued to plague those communities that were already mostly impacted by the COVID 19 outbreak. Retail numbers may have looked better than expected, but Amazon.com is not Main Street. Some states are experiencing higher outbreaks now of COVID 19 just weeks after major lockdown restrictions were lifted in these areas. Those states, they initially saw fewer cases. Now, unfortunately, it's beginning to increase. It's not a second wave from what I'm reading. I'm actually reading that the first wave is just reaching areas of the country that were previously lightly impacted. It's very regional and mostly impacting the warmer southern states at this time. But how will the resurgence of COVID 19 cases impact our national recovery over time? It seems to me some factors that would historically be bullish for gold and silver are no longer driving the metals. The metals feel much more closely tied to the overall equities market and appear to move mostly in tandem with stocks. No immediate changes to interest rates, perhaps through 2022. That was the overarching statement last week from the U.S. Federal Reserve Bank. That statement on the tails of their forecast for negative 6.5% growth in U.S. GDP for 2020, well, it should have sent gold higher, but it didn't. Unemployment numbers are forecast to settle in the 9 to 10% range by year's end. That's more than double the pre-outbreak jobless numbers. Congress alone, with its $3 trillion relief package earlier this year, will account for 14% of U.S. GDP for 2020 based on the latest forecast. Essentially, flipping the calendar over to January of 2021, well, it may be more of the same. So how is Wall Street thriving then while Main Street continues to bleed? Why with so much negative news have we seen lower highs in gold of late? And why is the U.S. dollar so strong? Can we continue to count on precious metals to offer protection from a stock market collapse? I obviously have a lot more questions than I do answers. After all, I'm just a stacker on YouTube and find my news the same way we all do. Last Thursday, we saw a massive sell-off in the equities market, as well as sinking treasury yields as Wall Street braced for more COVID-19 cases and the potential fallout of an infected workforce. Then this week, even the slightest good news in treatment options arises, and cue the bull flag. Now, I can't speak for everyone, but my brokerage account was fully in the green for the year at the beginning of last week, and settled only a couple of $100 down on the year by week's end. All in all, I've gained everything back and then some from the March market sell-off in equities. I was down over 35%. That's crazy when you think about it. It's only been 3 months, and what has really gotten better? I still have several relatives out of work. Now, this week, we see even more Fed bond buying to include corporate bonds now. Why not? We're already giving them interest rates below the inflation level to borrow. On top of comments today from Federal Reserve Chairman Jerome Powell that the Fed will continue to do whatever it takes to help the U.S. economy recover and bring employment numbers back in line. Whatever it takes, whatever it takes. It sounds like an Imagine Dragons song, but in reality, it's just unlimited debt creation as fuel. So these are scary times indeed ahead for the market. It's one article after another out there now contradicting each other. This is, after all, an election year here in the United States, and the opposition party and mainstream media will jump at any opportunity to make the current government look inept, weak, or even evil, while at the same time President Trump and his administration will continue to blow smoke up our bums on how great things are actually going for the economy. Basically, it's an election year, so the poop slinging is going to be deep from both sides. All of this printing, unemployment, civil unrest, it all seems so bullish for gold and silver. But what about silver? Well, If you were paying any attention in March of this year, you saw a very steep sell off in silver as the stock market crashed as the COVID 19 pandemic brought the economy to a near standstill and jobless claims spiked. Gold initially dipped heavily, but almost immediately recovered and then went positive very quickly. As a matter of fact, of all of the different assets out there that I track and hold, gold was the only one in positive territory in just a couple of weeks after the initial sell off. Silver, however, is trading in range, if not slightly above, its March sell off valuations, so what I would call its pre COVID 19 valuations pretty closely now in June. As you know, I'm not a financial advisor, folks, but I do feel that caution is wise at the moment if you're in paper silver and long on your trade, as things appear less bullish than before in the overall market, as most of these stock market gains are now in, and silver has fully recovered. The physical and paper silver markets have completely separated over the last few months, as you know. So while I do see high potential for another silver dip during 2020, especially due to silver's industrial ties, I must say that if the stock market tanks again, which is the talk so far, but not the action we're seeing, then I also imagine the physical premiums will keep silver prices elevated for stackers even in that scenario. Basically, I don't see silver going much cheaper today, even if spot falls. Again, these are just my humble opinions. However, gold analysts are talking of another buying opportunity soon as we've been witnessing lower highs in gold over the last 3 weeks. This opportunity for gold could be even better if equities do begin to head down. That opportunity to buy gold, however, on a dip will not last long, and the buying opportunity for quick gains will once more shift back to silver on the paper markets once a second low has been established. So be careful out there. Many analysts predict a W-shaped economic recovery and not the V-shaped recovery we have experienced so far. It hasn't been the case, but it's hard to imagine the market staying positive while the world continues to struggle. Based on the market reaction late last week, the Federal Reserve policies in place, and what continues to happen all across the world, these possibilities I speak of are, in my opinion, genuine possibilities based on what's really happening today and not what we'd like to see or believe is going to happen. What we've witnessed over these last few months is just, it's crazy. Friends, I honestly cannot see a scenario, at least a likely scenario, where I'll stop stacking, but I will be looking to add more gold during the third quarter. As the market has now almost completely recovered from its COVID 19 losses, at least temporarily, and with so many Americans still out of work, including friends and family, ongoing civil unrest in the streets, and endless currency printing, it's tough to find weakness in gold at this time, especially when looking at gold from a risk versus reward scenario and knowing how quickly it has recovered during most of the previous stock market sell-offs. Gold will hold much more of its value during the next drop than anything else I can think of and has showed this in the past. Any dip in gold to me is also another buying opportunity. Even a 10th ounce gold coin under $200 today is going for a better premium than the cheapest $20 generic silver round I can find. Of course, we are at a 100-to-1 GSR again. I'm much less concerned for gold than I am silver. As to silver, keep stacking, but don't be surprised if we see it fall in spot sharply again if the W recovery scenario comes to fruition. Premiums will probably remain or go even higher, keeping physical buy-sell prices elevated over the paper price, just as before. In this scenario, money could be made if you get into paper silver low and ride that recovery, which took only 3 short months from the last major sell-off. I understand that if you don't hold it, you don't own it. And I have a lot of physical bullion compared to what I carry on the paper side with precious metals, but don't let that stop you from taking advantage of what might be easy money and an opportunity to add more weight to your physical stack if you get in low and remain patient for a few months during the inevitable recovery. We'll see if that actually happens, but even if we are indeed back in the green for some time with stocks, I do expect 2020 to continue to throw jabs our way. After all, it's an election year. I'm paying attention, guys and girls, and we may be on the cusp of the next crazy ride in the stock market. If that happens, look for a quick dip in gold, followed by a quick recovery and a deeper fall in silver with a longer recovery. If I'm wrong and everything continues to recover as is, the declared Federal Reserve policy at minimum will help keep metals prices elevated as the debt creation cycle looks to continue for years on end. What are your thoughts on the market, and what is your 2020 outlook for gold and silver? I'm curious to know. These are all just my theories and opinions, and I'm just a stacker on YouTube, but please leave a comment below in the comment section and let's discuss. Thanks everybody, take care, and until next time.